Without a doubt, there are plenty of solid income ETFs out there. But today, we're zeroing in on the new kids on the block who are already making legendary moves in 2025. Hold on to your seatbelts, folks. This is going to be a good one. In past videos, we focus on the established superstars of the income ETF world. I've usually left the newer funds on the sidelines until they build a track record. Well, by popular request, not today. It is about time to let these rookies step into the spotlight and show you just what they can do. What makes these newcomers stand out isn't just their yield, it's the way they generate it. They are combining a covered call strategy with a touch of leverage. This is a potent mix that can deliver eye-catching payouts, but at the same time, it does come with higher risk. So it is important to factor that in to make sure it is not exceeding your risk profile. Covered call ETFs. They earn extra income by, renting out their stocks through option contracts. In practice, this means they sell the right for someone else to buy a stock they already own at a set price, collecting a premium for that rent in return. It's a strategy that can enhance cash flow and help smooth returns. But as I mentioned with that risk earlier, it does cap some of the upside if the stock price jumps, significantly. Leverage, on the other hand, it's like taking out a small loan to own a little more of those income producing investments. By borrowing modestly, and we already mentioned 25%, these ETFs can amplify both the income they generate and any capital gains. This trade off is that leverage also magnifies losses during market downturns. So it is important to be comfortable with bigger swings in value because let me tell you, you are going to get them. A sub to the channel is your way to take bigger swings at future content. There were some qualifying criteria for today's list. The ETFs needed to have not lost any value in 2025, and they also needed to be no more than a year old. In fact, most of these funds were released in 2025. Today's list is sorted by year-to-date total return. So without any further ado, let's do this. Kicking off our list at number 7, we have the Harvest Diversified High Income Shares. So HHIS is the ticker. This ETF, it holds all the other Harvest single share ETFs, it gives you great diversification across those new Harvest funds. I will also point out that I would consider this to be a technology play. At the time of recording, its price is coming in at $12.96, and it's got an NAV of $12.96. Those assets under management, 720.54 million. Now, it does not have a management fee, although it does pass on the fee of its underlying assets, and they are all sitting at 0.40%. So effectively, your management fee technically, even though it's zero, it's actually 0.40%. Looking at their yield, that comes in at 23.15%, monthly dividend 25 cents per share. And for their returns, their year-to-date return on investment 4.96%. Factor in the dividends, total return 17.09%. All right, moving into the number 6 position, we have the Harvest Netflix Enhanced High Income Shares ETF, ticker of NFLY. Netflix, oh boy, they've had a great year so far, and that's translated in some pretty good returns on this ETF. At the time of recording, their price coming in at $13.36. They have an NAV of $13.35. Those assets under management, 50.74 million, and their management fee, 0.40%. The yield on this one, 15.09%. It is a monthly dividend of 20 cents per share. How did they do in 2025? Their year-to-date return on investment, 10.96%. Factor in the dividends, total return, 17.94%. Okay, moving into position number 5, we've got the Harvest NVIDIA Enhanced High Income Shares ETF, ticker of NVHE. NVIDIA continues to dominate the tech sector, and this year has been no exception. The only real surprise here is that they didn't finish higher on this list. I expected them 1 or 2, not 5. At the time of recording, their price is coming in at $12.95. They have an NAV of $12.96. Assets under management, 162.37 million, and that management fee 0.40%. Looking at their dividend, 20.38% yield, and that's a monthly dividend of 22 cents per share. This year, their year-to-date return on investment, 7.29%. Add in those dividends, total return 20.05%. All right. Coming in at number 4, we've got the Harvest Coinbase Enhanced High Income Shares ETF, ticker of CYNE. 2025 has continued to be a banner year for crypto, so it is not surprising to see that Coinbase had they had a really good run of it this year so far. Their price at time of recording, $13.75. Their NAV, $13.73. Those assets under management, 65.24 million. And their management fee, 0.40%. No surprise there. You're going to see that number a lot today. Their yield coming in at 34.91%. It is a monthly dividend of 40 cents per share. So looking at their year so far, their year-to-date return on investment, 9.56%. Adding in the dividend, total return 25.50%. All right, taking our number 3 position, we've got the Harvest MicroStrategy Enhanced High Income Shares ETF. They have a ticker of MSTE. Strategy holds a lot of Bitcoin on their balance sheets, and thus when Bitcoin soars, so too does Strategy, and by default, this ETF. At the time of recording, their price was coming in at $16.08, and they have an NAV of $16.09. Those assets under management, 333.54 million, and that familiar management fee, 0.40%. Looking at their dividend, they have a really nice yield, 46.57%, monthly dividend of 60 cents per share. Their year-to-date return on investment, 19.11%. Add in those dividends, oh boy, total return 42.22%. These numbers are getting really nice. And in our not quite top spot at number 2, we've got the Harvest AMD Enhanced High Income Shares ETF, ticker of AMDY. With the spotlight on NVIDIA, this is a little bit of a surprise, but AMD has had a great year, and they are certainly giving NVIDIA, they're giving them a run for the money, especially when it comes to gaming. Looking at their price at time of recording, that's coming in at $18.21, and they have an NAV of $18.24. Those assets under management, 62.02 million, and they've got a management fee of 0.40%. Their yield is actually not that high. It's 14.50%, monthly dividend of 24 cents per share. Looking at their year-to-date, their return on investment, 46.97%. So they did this mostly by growth. Adding in the dividends, total return, 55.85%. That's not too shabby. All right, let's take a look at our number 1 spot. We've got the Harvest Palantir Enhanced High Income Shares ETF with a ticker of PLTE. With defense spending on the rise worldwide, Palantir has exploded big time. No pun intended there. At the time of recording, their price coming in at $29.18, NAV of $29.28. Those assets under management, 128.10 million, and their management fee, 0.40%. Their yield, not bad, 20.70%, monthly dividend of 55 cents per share. All right. Looking at their year-to-date return on investment, 128.86%. Holy banana bread, that's just from their growth. Adding in those dividends, we get a total return of 152.55%, more than enough to take the top spot, that's for sure. When I began making this video, I did not expect every ETF to belong to Harvest, but, the math sure did. These are some great ETFs for sure, and I do expect them to continue to surprise and, in many cases, exceed expectations further into the year. If you are interested in any of the ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money. on that table. Let's continue that learning journey. Check out this video on Loblaws 4-1 split. Thank you for watching, and I will see you in the next video.